Hello, and welcome to Finance Professor, where we provide news, insights, and analysis on all things finance. In this video, we will be discussing the history of the stock market since 1930. We'll take a deep dive into the ups and downs of the market over the past century, discussing major events that have shaped the market and the lessons we can learn from them. At the end of the video, we would like to share with you how the stock market may be a good avenue to grow your wealth if you understand its ebbs and flows. Along the way, we'll also share some light stories and personal anecdotes to make the content more relatable and enjoyable. So sit back and get ready to learn about the ebbs and flows of the stock market. We'll start our journey in the 1930s during the Great Depression. If you or your parents lived through this, you might remember stories of people losing their life savings in the stock market crash of 1929 and the subsequent economic downturn. My own grandfather told me about how he lost everything in the crash and he never invested in the stock market again. The Great Depression had a devastating effect on the market and the overall economy, and it took years for the market to recover. The Depression also led to significant changes in government policy and regulation, as policymakers sought to prevent similar crises from occurring in the future. The 1940s and 1950s were marked by World War II and the post-war economic boom. The stock market experienced a steady rise during this time as the economy recovered and grew. This period was characterized by a strong focus on manufacturing and a growing middle class. The post-war boom also saw the emergence of mutual funds and other investment vehicles that made it easier for individual investors to participate in the market. My parents told me about how they started investing in the stock market in the 1950s, and they've been able to watch their investments grow over the decades. Iconic companies of this era included General Electric, IBM, and Procter & Gamble, which all saw their stock prices rise significantly as the market boomed. Many people grew their wealth during this time by investing in these and other blue-chip companies and by taking a long-term approach to investing. The 1960s and 1970s were marked by economic instability and political turmoil. The stock market experienced significant fluctuations during this time, with several major events having a significant impact on the market. The assassination of President Kennedy, the Vietnam War, and the Watergate scandal all contributed to market volatility. In addition, the oil crisis of the 1970s had a major impact on the market, as rising energy prices led to inflation and economic downturn. My own investing journey started in the 1970s, and I remember being worried about the impact of these events on the market. However, I also learned the importance of taking a long-term approach and not getting too caught up in short-term market fluctuations. Iconic companies of this era included oil giants like ExxonMobil and Chevron, which saw their stock prices rise significantly as energy prices soared. Many people grew their wealth during this time by investing in these and other energy companies or by taking advantage of market fluctuations through strategies like short selling. The 1980s and 1990s saw the rise of the tech industry and the emergence of the internet. This period was marked by the so-called tech boom, as investors poured money into technology companies. Companies like Microsoft, Apple, and Intel became household names as the tech sector boomed. The stock market experienced significant growth during this time, with the Nasdaq index reaching all-time highs in the late 1990s. Many people grew their wealth during this time by investing in tech companies, either through individual stock purchases or through mutual funds and other investment vehicles that focused on the tech sector. However, the tech boom was not without its risks, and the market eventually experienced a correction as some of the hype proved to be unfounded. The early 2000s were marked by the dot-com bubble, as investors poured money into internet companies that often had little or no revenue. The bubble eventually burst, leading to a significant decline in the stock market. The late 2000s were marked by the financial crisis as the housing market collapsed and the failure of major financial institutions led to a significant downturn in the market. The crisis had far-reaching consequences, including the implementation of new regulations to prevent similar crises from occurring in the future. If you are old enough to remember this time, you might have seen the value of your investments decline significantly, or you might have known someone who lost their job or their home. Iconic companies of this era included financial institutions like Lehman Brothers and Bear Stearns, which collapsed during the crisis, and tech companies like Google and Amazon, which emerged as major players in the market. Many people lost significant wealth during this time, either due to the failure of these companies or due to the overall market downturn. The stock market has experienced a steady recovery and growth since the financial crisis of the late 2000s. The market has reached all-time highs in recent years, although there have been periodic dips and corrections along the way. The market has also become increasingly global in nature, with investors looking beyond the United States for opportunities. The rise of index funds and exchange-traded funds has also made it easier for individual investors to participate in the market. Iconic companies of this era include tech giants like Facebook and Apple, which have seen their stock prices rise significantly as the market has recovered. Many people have grown their wealth during this time by investing in these and other companies. And that concludes our journey through the history of the stock market since 1930. We've seen the ups and downs of the market over the past century, and it's clear that the stock market can be volatile and unpredictable. However, it has also proven to be a reliable source of long-term growth for investors who are willing to take a long-term approach. Iconic companies have emerged in each of the cycles we've discussed, and many people have grown their wealth through smart investments in these and other companies. So the market may be down and fearful today, but remember, it will only go up from here. Thank you for watching, and we hope you've learned something about the history of the stock market. If you enjoyed this video, be sure to subscribe to our channel for more insights and analysis on all things finance, including regular updates on the stock market. We'll also be sharing more stories and examples of how people have grown their wealth through smart investing. So stay tuned for more, and don't forget to leave a comment below. We love hearing from our viewers, and we'll be sure to respond to your comments. Thanks again for watching, and we'll see you in the next video.